Okay, so let's break this down. You see the headlines, right? Everyone's calling it a war story. But if you look at how the markets are behaving, well, they're seeing something else entirely, something way bigger, something that could actually end up affecting all of us. And right there, that's the key difference we have to get our heads around. You've got the war story on one side, but then you have what traders are really worried about, an oil shock. And believe me, those two things lead to completely different outcomes. So, what's the big deal with an oil shock? Why is it so much more dangerous? Well, it's because energy isn't just another commodity, it's foundational. When the price of oil moves, it doesn't just stay in the energy sector. Nope, it leaks. It bleeds into every single part of the economy. And you can literally watch it spread. It all starts with the obvious one, right? Fuel. Your gas prices go up. But then that makes it more expensive to ship everything. And if shipping costs go up, guess what? So does the price of your food. All of this just pours fuel on the fire of inflation. That makes central banks nervous about interest rates, and before you know it, the value of pretty much every stock out there starts to get hit. So you see, the market isn't just spooked by the missiles in the headlines. From a purely financial point of view, the real terror is the idea that a major energy choke point could get shut down. We're talking about a critical artery for the entire global economy, and there's one spot on the map that has everybody holding their breath. I'm talking about the Strait of Hormuz. If you're a geopolitical analyst, this is ground zero. It is, without a doubt, one of the most important oil arteries on Earth. Think about it. A huge chunk of the entire world's daily oil supply has to squeeze through this one tiny passage. And the markets, oh, they know this all too well. That's exactly why they reacted so fast. And this really shows you what the market was thinking. The price of crude oil didn't just go up, it exploded. It literally gapped up overnight. Why? Because traders weren't pricing in a small conflict. No way. They were pricing in the risk of a catastrophic global disruption. And that initial price explosion, that's the first domino to fall. Okay, so that brings us to the classic macro chain reaction. You see this play out time and time again. Step 1, the war creates fear. Simple enough. Step 2, that fear pushes oil prices sky high. Step 3, higher oil puts massive pressure on inflation. Now here's the tricky part, the real trap. Step 4, inflation traps the policymakers. They can't just cut interest rates to help the economy because that would make inflation even worse. And finally, step 5, the markets see this, they realize the central banks are stuck, and they have to reprice everything, stocks, bonds, the whole shebang. So where does this whole chain reaction lead? Well, it leads to the one word that gives every economist and central banker nightmares. You've definitely heard it thrown around, but it's so important to get what it really means right now. So what is this absolute nightmare scenario? Stagflation, that's the one. And this definition really nails it. Think of expensive energy as a giant tax on the entire world. It just sucks money out of your pocket and out of businesses' bank accounts. That, of course, slows down growth. But, and here's the kicker, at the very same time, prices for everything are still going up. So you end up with a stagnant, slow economy and high inflation. It is quite literally the worst of both worlds. And that is exactly why the real pros, the smart money, they aren't just staring at war maps all day. For them, the conflict is just the opening act. What they are truly obsessed with is the macro sequence. They're watching bond yields, they're watching inflation forecasts, they're watching shipping rates. That's where you see the real financial damage starting to show up. Which really brings us to the bottom line here. Look, if oil prices spike and then come right back down, the market can probably handle it. It's a blip. But if they stay high, if they stay elevated for a while, then this whole thing stops being a regional story. It's not just about one part of the world anymore. It becomes an everyone story. It hits your stocks, your bonds, what you pay at the store, and the health of the entire global economy. And I think this final thought just sums it all up perfectly. It doesn't matter what else is going on, what other stories are grabbing the headlines. The quote says it all. When oil becomes the story, eventually every market has to listen. And that's the absolute truth.